The Federation Account Allocation Committee has shared 2.094 trillion naira from October 2025 revenue among the federal government, 36 states, and 774 local government councils, according to a recent report. The revenue pool consisted of statutory earnings, value-added tax collections, and receipts from the electronic money transfer levy. From the allocation, the federal government received over 758 billion naira, states received about 689 billion naira, while local councils got more than 505 billion naira. Oil-producing states also benefited from the 13% derivation revenue, receiving over 141 billion naira. FAAC noted that several revenue lines, including companies' income tax, capital gains tax, and customs duties, recorded increases during the month. However, value-added tax and some levies saw slight declines. Officials say the higher revenue distribution is expected to give states and local councils additional fiscal room for preserving development needs. Nigeria's newly enacted fiscal reform law has officially brought virtual currencies under the country's tax system. Chairman of the Presidential Fiscal Policy and Tax Reforms Committee, Taiwo Oyedele, announced that digital assets, including cryptocurrencies, will now be taxable under the revised law. Oyedele clarified that while gains from crypto transactions will be taxed, capital market gains remain exempt to encourage young people to invest in regulated financial markets. He noted that misinformation about tax laws has discouraged participation, with many Nigerians wrongly assuming a 30% charge on capital market investments. The reform law also provides a dedicated reserve to ensure taxpayers receive refunds when eligible, a measure aimed at improving trust in the tax system. To boost nationwide awareness, the committee is partnering with the National Orientation Agency to translate the new tax law into major Nigerian languages, making it easier for citizens to understand their obligations under the updated system. The Federal Capital Territory Administration will begin enforcement actions on November 26th against defaulters owing ground rent, land use conversion fees, and charges linked to rights and certificates of occupancy. According to the FCT authorities, the enforcement will also target individuals who have bought properties without obtaining ministerial consent or registering their deeds as required by law. The administration had earlier given several grace periods to allow affected property owners to settle their outstanding payments. The extension for ground rent expired in June, while the final extension for land use conversion ends on November 24th. Officials warn that failure to comply after enforcement begins could attract heavy penalties as the FCTA moves to improve revenue collection and ensure proper land administration practices across the capital. First Bank Nigeria has defended its management of the 200 billion naira MSME Intervention Fund, emphasizing that the loans play a critical role in supporting small businesses across the country. The fund, provided under a presidential initiative, offers micro, small, and medium enterprises access to single-digit interest loans. The bank stated that its participation aligns with its long-standing objective of boosting entrepreneurship and strengthening the real sector. First Bank highlighted that in previous years, it had already disbursed hundreds of billions of naira to SMEs, reinforcing its commitment to national economic growth. The intervention fund, implemented through the Bank of Industry, is designed to cushion the impact of economic pressures on local businesses and promote job creation. Analysts say the initiative is expected to help stabilize the SME ecosystem and support inclusive development nationwide. And that's business news on Global News. In Abuja, I am Tom Sinime Natus.